Welcome, ladies and gentlemen. Been meaning to do this video for quite a while, but I honestly got bored of Tom Nash because I've exposed him as a complete and utter fraud. And by the way, Tom, I still am offering you $10,000 if you can prove to me your background, your credentials that you have claimed in the past. Undergrad degree in business, master's degree in business, law degree, more than 10 years with the top 4 Wall Street firm as a senior analyst. All you have to do, Tom, is prove it to me, unequivocally, prove it to me. I'll sign an NDA, won't disclose your real name. Let's go, Tom. Folks, this is fraud what this guy's doing. It's complete fraud. And aside from credentials, Tom, if you can show me the credentials, I'm satisfied with the credentials, I will apologize to you, I will hand you $10,000. But what I won't do is say that you're competent, because you're completely clueless, you're causing people to lose massive amounts of money, and you're making money steering people into the gutter. You're making money through fraud. You're defrauding people. So folks, let me just go ahead, and I probably have this original video, because I remember the situation specifically in my archives. I probably have it. I don't know where it is right now. But it's actually very good that I'm using this video, because I'm going to show you how Tom Nash now is using a different strategy to cover up from his incompetence and terrible calls. Folks, if you're listening to somebody, if you're following someone in investments, first thing is you better find out how they're qualified. Tom Nash created mythology about his credentials to make you think he was a pro. Okay, maybe you don't realize that. Well, if he gives you some type of advice, write it down. He needs to be held accountable. Save all of his videos. You can't just save the video titles, as you're going to see now, because Tom Nash now is implementing a new strategy. He cuts off and edits previous videos. So you can do that. You can edit YouTube videos. And you'll notice at the end of this video, Tom cut this original video is considerably longer. You can see it's only listed as 3 minutes and 4 seconds. Tom Nash, you are a complete scumbag and fraud. You're dishonest. You're deceiving people. So let's go ahead and talk about this. I'm going to go ahead and give you a little rundown on the video, and then we're going to play it. Probably play it in its entirety since it's only 3 minutes. So as you'll recall, this came out a few weeks after Elon Musk announced his intent to purchase Twitter. And so Tom, during this very tumultuous period in the market, he wanted to give his cult members a great opportunity to make money. And so he basically says in this video, it's a great arbitrage situation because you can make some money during this terrible market period by buying the Twitter stock. It's a couple of bucks down from where Elon wants it. So let's go ahead and listen to the video. Watch the video.
You know, I think most of you would agree with me. We don't have a lot of certainty in our life. COVID, wars, the craziness of the stock market. You know, we plan, God laughs, and all that shit. You know, besides death and taxes, there's just not a lot of certainty in our life, especially in the stock market. Now, hold on a second. Unless you're going to use risk arbitrage. Now, risk arbitrage is a very interesting strategy which is being used every single day by hedge funds and professional investors. And
so you got that, folks? So he's telling you about life is uncertain. That's the segue into introducing novice investors into arbitrage strategies. First and foremost, an arbitrage strategy should never be used by a retail investor. You're not sophisticated enough to know what's going on. You don't know how to hedge, okay? You have to be advanced, and there's a reason why there are disparities, there's arbitrage, there's a difference in pricing, and you're not going to be aware of that. Okay, so he's setting this up to tell you, hey, I'm going to show you a way where there is certainty. Let's continue.
And I'm going to show you how you can use this strategy today with a specific case where you can apply it and make about 4% in a few weeks very low risk. Now, I know, it's not Lambo money. You're not going to be able to buy a mansion off of 4%, but
You hear that, folks? So he's actually, Tom Nash has never worked on Wall Street. He has no idea what he's talking about. No person, no sane person with an IQ over 80 would ever engage in any type of arbitrage situation for 4%. That's for funds. Funds do that. Funds make money off of a number of transactions over a short period of time. Individuals should never take, imagine this, folks. You're going to take that risk during this period in the market. Let me show you what the market was doing during that time. Now, this is a chart of the NASDAQ 100 index, which is generally going to be a little bit less risky than the overall NASDAQ because of the components of the NASDAQ 100. But nonetheless, as you'll recall, during March, all the way down through the last part of May, we experienced a very, very worrisome sell-off in the markets. And so when people were panicking, worried, concerned, depressed, angry, Tom Nash comes out and gives you a way to make money. Think about that during a very risky period. Now, this was, I believe, April 26th when he made this video, right? And so he's basically saying, look, during this rough market time, I'm going to show you a way to make 4% over a few week period, okay? And of course, the markets would go down considerably after that. Let's get back to the video.
but it's nice to have, especially in this insane market. Now look, the market has completely shifted. We went from this insanity of 2020, even 2021, into this barren land. We're basically, growing our own tomatoes, hunting for food, screaming into our screaming bags, trying to figure out what the hell is going on. In this market, 4% in a few weeks at a low risk sounds just about right. So let me show you.
So he's saying it's 4% upside. And remember, he talked about certainty in the beginning. Not certain about many things, but, and then he introduces you to this concept of arbitrage. And he's claiming that 4% in a few weeks to take this risk it's a great deal. When I saw this, I was shocked. Irresponsible, complete bozo clown. Let's go ahead. Take a look.
Show you.
Tom Nash, the fake analyst, the liar, the fraud, based in Tel Aviv, Israel, not New York.
Now, the strategy I want to show you in this video is a strategy that's very common in the financial industry. Hedge funds, professional investors use it every day, but retail investors don't really get exposed to it too much. And
yeah, because they shouldn't. It's too risky. You're irresponsible. You're clueless. You're a bozo. You don't know what you're talking about. You're also a fraud, Tom. You're fraud.
kind of that's the purpose of this channel in general, to democratize this information for you. So here it is.
Notice the buzzword, democratize. That's what all the millennials and the other kids beneath them fall into. Democratize. We want the same access as Wall Street. Well, guess what, guys? Certain things you need to stay the hell away from. And first of all, it's the fake investment gurus on YouTube, first and foremost. Second of all, you don't engage in risky strategies. This guy is putting people into a risky, very risky strategy.
I'm not going to put this on my Patreon, so this is for everybody to use.
Okay, so this is for everyone to use to get blown up on. Great, Tom. Gee, thanks. You're so nice. Well, I'm going to sign up for your Patreon after I see this because you're so generous. Thank you for the 4%.
Essentially, this strategy is where you actually look forward to a specific event happening. And if that event happens, then you make the money, regardless of how good or bad the market performs.
Okay, think about that. Think about that. He's explaining this arbitrage situation as betting on an event. Betting on an event. If the event happens, you make money. Okay. Folks, this is a guy Tom Nash, who refuses to give you his real name for bogus reasons, he doesn't, in reality, he doesn't want you to look up and realize that he's lying about his credentials. $10,000, Tom. I'll give you 10,000. Show me your credentials. Let's go, Tom. Folks, email him. Write it in the comments. Spread it to people. Ask CoffeeZilla Boy why he promoted this fraud, and won't even say, hey, this guy's going to give you $10,000, Tom. Let's hear what he has to say. Why don't you do it? Right? So getting back to Tom, he's explaining arbitrage is basically if a decision is made and you bet on it, you make some money, right? This is from a guy who claims to be not only a value investor, but YouTube's value guy. He's YouTube's value guy. And he's pitching risky transactions that only financial institutions and professionally managed funds engage in, typically. Arbitrage. Now, I know this. I'm a Wall Street veteran. 3 decades in the business, one of the top analysts and strategists in the world, predicted the financial crisis. I advise hedge funds. I advise a lot of funds, multi-billion dollar. I know about these types of strategies. And they're risky. You have to have a good amount of hedging. You have to have a lot of vital information and analysis to engage in these types of strategies. Okay? Tom Nash, the self-proclaimed value investor, is pitching a very risky trading strategy. That's what it is. It's basically a trading strategy during a very risky time in the market. Keep that in mind.
The market can be red, the market can be green. It doesn't matter as long as the event that you're looking at actually materializes, actually happens. Now, in M&A, mergers and acquisitions, that event is called the closing of the deal. As you may have heard, the Twitter board of directors agreed to the terms of the deal that was proposed by Elon Musk. That doesn't mean that the deal is actually going to happen. There's no 100% certainty that the deal will go through. This is a really good sign, but there's still things that need to happen in the meantime for the deal to close. Until the deal closes, there's still a certain level of uncertainty. Now, that uncertainty is being priced in the stock market. If you look at the price right now of the stock, it's about $52, while Elon Musk is offering $54.20 per share. So there's arbitrage. This little gap is called the risk arbitrage. This is the gap that represents the chance that this deal is not going to go through. And as you can see, $2.20 is not a lot of arbitrage. I mean, it's a very tiny arbitrage. But as we say in Russia, it's not about the size, it's about how you use it.
You get that, folks? Here's the critical point. Tom Nash cut the video off. That's right. He cut that video off. And this is why you got to save all his videos, folks. People out there, save all of his videos and make sure you timestamp them. Put a date there. Tom Nash is now editing videos, hiding his bogus predictions and analysis. This video is longer than that. It's just beginning. Tom Nash, before I continue with that, let's retrace what he had to say. He basically said there's a very small amount of risk, and it's priced in to the stock price. Let's take a look now. April 26, 2022. And this is a chart of Twitter. This is the spike when Musk announces his intent to buy Twitter. And this is April 26th. The closing price is $49.68. Now, he obviously made this video the day before, on April 25th, when it was just under $52. And he stated that in the video. And the takeout price is $54 and change. So you're looking at about $2 and small change upside. Okay? We all know what happened after that. You can just see for yourself, and you can follow the course of events. It's been a complete disaster. If you listen to Tom Nash, you lost up to 34%. And on average, that would be here recently in July. Now, the market's rallied over the past few weeks to push this thing back up. But let's say over the next several weeks after this video came out, you can see it's just kind of trading sideways around $38, $39. That's going to be a loss of 25% on average. Ask yourself at what point you would have thrown in the towel. Would you have thrown in the towel here? You're going to wait it out, right? If you hadn't thrown in the towel before, I'm pretty sure you'd have thrown it in the towel when it collapsed here. Nonetheless, best case scenario today, you're looking at still 23% or so decline. And Tom is hiding this recommendation from the video. It's cut it out. Now, you can tell he's kind of recommending it, but he's actually talking about numbers that you can make, and you're going to see this in the comments. So let's go ahead and listen to what Tom has to say again as we look at the chart.
Now, the strategy I want to show you in this video is a strategy that's very common in the financial industry. Hedge funds, professional investors use it every day, but retail investors don't really get exposed to it too much, and kind of that's the purpose of this channel in general, to democratize this information for you. So here it is.
You hear that, folks? Once again, notice the little subtle con artistry tactics. He's saying, look, first of all, this is something that's high certainty. You're going to win. It's not going to be a lot, 4%, but you're going to get it in a few weeks. It's pretty much what he's saying. And then he's saying it's used by professional investors, hedge funds, and you don't know about it typically. So he's going to show you. He's democratizing investments for you. That's the purpose of this channel. Wow, Tom, you're a hero. The problem is Tom Nash has never worked on Wall Street, never been an analyst. And by the way, let me just mention something, folks. Analysts don't know shit about investment strategies and trading. Nothing. Zero. Even if he were a former Wall Street analyst, which I can guarantee you he was not. That's why I'm putting $10,000 on the line. This guy is a complete scumbag fraudster, without a doubt.
Don't really get exposed to it too much, and kind of that's the purpose of this channel in general, to democratize this information for you. So here it is. I'm not going to put this on my Patreon, so this is for everybody to use. Essentially, this strategy is where you actually look forward to a specific event happening, and if that event happens, then you make the money regardless of how good or bad the market performs. The market can be red, the market can be green, it doesn't matter as long as the event that you're looking at actually materializes, actually happens. Now, in M&A, mergers and acquisitions, that event is called the closing of the deal. As you may have heard, the Twitter board of directors agreed to the terms of the deal that was proposed by Elon Musk. That doesn't mean that the deal is actually going to happen. There's no 100% certainty that the deal will go through. This is a really good sign, but there's still things that need to happen in the meantime for the deal to close. Until the deal closes, there's still a certain level of uncertainty. Now, that uncertainty is being priced in the stock market. If you look at the price right now of the stock, it's about $52, while Elon Musk is offering $54.20 per share. So there's arbitrage. This little gap is called the risk arbitrage. This is the gap that represents the chance that this deal is not going to go through. And as you can see, $2.20 is not a lot of arbitrage. I mean, it's a very tiny arbitrage. But as we say in Russia, it's not about the size, it's about how you use it.
Yeah, well, Tom, you're not using your small size too well. The small size of your brain is not working too well. Complete disaster, utter disaster. And I can tell you, folks, I know this for a fact. I'm an expert in the market, and I did not buy Twitter. I knew there was a lot of risk. There's a lot of arbitrage out there. Let me just explain something. If there's a difference between an offer price and the current trading price, the larger that difference is, you should take that to mean the larger the risk of that deal going through is. Okay? Now, In this situation, the risk was small because the board approved Musk's initial offer, right? This is why it rallied. So ask yourself the question, is it worth it? Because these deals take a long time to go through and a lot of things can happen. Is it worth it for $2, for 4% to hold on to this for God knows how long during this very risky market when things are going nowhere but down? And Tom's telling you, oh no, this is not going to go down in this market. Well, you all saw how this played out, folks. Once again, Tom Nash deleted the rest of this video, or he edited it. That's right. Guaranteed fact. Write it down. Tom Nash, I know that you did. You were telling people to buy Twitter for an easy 4%. And in fact, if you take a look at some of the comments here, you can see that. In the video, I will show you how to use a strategy called risk arbitrage to make 5 to 10% on the Twitter Elon Musk deal within a couple of weeks. And by the way, what is he talking about a couple of weeks? These deals don't close in a couple of weeks. This guy's an idiot. Complete disinformation idiot. If you lost money listening to this guy, and especially if you paid him money through Patreon or anything else, email me. Email me. Okay? Take a look what my email is on the channel. Risk arbitrage strategy was originally highlighted by Benjamin Graham in his famous book, The Intelligent Investor. So notice he's trying to validate this. Benjamin Graham, the value investor. Folks, risk arbitrage is not a value investment strategy. It's a risky strategy. It's a sophisticated strategy. Okay? And that's fact. And by the way, most of what Benjamin Graham wrote about in his famous book is not even applicable today. Let's continue. This strategy is used by hedge funds and professional investors. Okay, that's correct. So why are you pitching it to retail sheep, the lowest hanging fruit in the investment world, which are on YouTube? Because he wants to democratize this advanced technique for you guys to participate and lose your shirt. It's a way to benefit from predictable events resulting from mergers and acquisitions, regardless of overall market movement. So notice this. It's a way to benefit from predictable events. This is not a predictable event. What are you talking about? Basically, you will make money regardless of how good or bad the market will perform as long as a certain event happens. The Twitter deal is a good example. Elon buys Twitter at $54.20. Current share price is $52, which gives a risk arbitrage of $2.20 per share. A nice 4% return as long as the deal doesn't fall through from now until closing, which is expected in a couple of weeks. Folks, I don't know. Maybe he read that somewhere. Maybe it was reported in a couple of weeks. That's just not going to happen. It's not going to happen. That's just too soon. Anyway, if the deal goes as expected, you make 4% in a month or so, but if it falls through, you stand to lose a lot of money, maybe as much as... So this is all edited. This is all edited. He never mentioned this. Tom Nash, you're a fraud, man. He never mentioned this. Folks, take screenshots of Tom's descriptions. This guy is manipulating his previous disaster calls, just like he removed his Peloton video. Complete disaster. The current share price is a bit below the deal offering to represent the risk that the deal can fail. You don't catch the big gain speculating on the deal before it's announced. So Tom Nash has completely recharacterized this blunder, this terrible call. And I will guarantee you he got this idea from the sites that he's involved with. You know, the boiler room trash sites, Seeking Alpha and Tip Ranks, which are based in Israel. They are complete boiler room. Seeking Alpha was good about 12 years ago when I was writing on there, when there were other professionals on there, until they started discriminating against me based upon my race, and were hiding my articles and putting articles of people from Israel above mine, and they didn't have any experience. That's right, folks. That's fact. It's all been documented. So let's take a look at some of the comments to see if we can find some trace of the reality. Once again, Tom Nash changed this description. He didn't talk about 50% downside at all. And he deleted the last part of this video, which lasts at least 3 or 4 minutes longer. So this guy is actually saying you're better off shorting the stock. And that's correct. It would have been better off, although it's obviously a risky situation, a risky thing to do. I wouldn't recommend it. Not if a higher bid comes in. So what this guy is saying basically is he's looking at the potential downside. We know the upside, right? This is actually a good call if you're involved in a risky situation, you see, because the upside is about $54.20, assuming there's no competitive bids, which there would not be. Nobody wants Twitter. It's dog shit. So if you're shorting it, the downside for your short is if it goes to 54.20, which is 4% plus your fees for shorting. So it's actually a pretty good call that this guy talked about. But Tom says no. No, higher bid's not going to come in, Tom. Nobody wants it. It's garbage. So let's read this from Mr. Barub. Hey, Tom, subscriber here with a question for you. You refer to this sell as a couple of weeks away, but my research has led me to believe the actual stock sale could be multiple months away. What's your opinion on this? No comment. He doesn't reply. This gentleman is exactly correct, as I mentioned earlier. 2-week closing? What is he talking about? What a clown. Tom Nash, you're an incompetent clown and a fraudster. $10,000. Show me your credentials, Tom. You won't ever do it. You won't ever address it because you're a fraud. You know I'm a BSD. You know I'm the real deal. And you know I've exposed you. You can't walk your way or talk your way out of lies when you're up against me, Tom Nash, or whatever your name is. See? Jason brings up, what if the deal gets complicated? You see? Apparently, Tom had a response for Jason, and Tom removed that response. You see that? Interesting. Michael Ortega. The stock is lower now. It's at $50, so the difference is now $4. The gap of uncertainty keeps getting wider. So in other words, Michael is basically implying that based upon the arbitrage, the spread between the market price and Elon's intended or stated takeout price at $54.20, this indicates that there's more risk of the deal not going through. That's basically what he is implying. What does Tom say? Yeah, I think the market is overpricing the risk for such a simple deal from this point on. See that? Tom's saying, listen, yeah, the market is wrong. Tom Nash is right. The market's wrong. Unbelievable. This, folks, I'm showing you this so you can see that Tom Nash cut off that video. I guarantee you he did. I bet $10,000 he did. I know he did for a fact. And I probably have the original video somewhere in my archives. Bob Smith. Tom Nash. This is 2 weeks ago. So now that the Twitter deal that I warned you would fail, is officially dead, unless Twitter wants to fight years in court, will you now make a video apologizing to your subscribers for telling them to buy into a deal claiming it was basically risk-free when it obviously wasn't? Your subscribers lost 10,000s, maybe even hundred thousands of dollars, I guess this is. If you had any sort of spine, the least you can do is apologize to them. And I have to believe this is when Tom deleted the remainder of the video, when he came out and said exactly what this guy, Bob Smith, said. He said it's basically no risk deal. No risk, he basically said. Buy it. It's a slam dunk. Folks, this guy, Tom Nash, something's got to be done about this guy. This guy is a dangerous liar and fraud, steering people into the poorhouse. So this guy he's part of the Tom Nash cult who's delusional. He adjusts to 4% in 2 weeks. Once again, 4% in 2 weeks is ridiculous. This is just complete disinformation. It would never close in 2 weeks. So the guy says, well, that's 104% in a year. People should be happy about that, my guy. Interesting. So Tom has two responses that he's deleted one of them. I never said 2 weeks, 6 weeks at the earliest. Interesting. Really? Take a look, folks. Within a couple of weeks. Tom, you're not too smart when you are trying to erase your tracks. See that, folks? And you probably said it in the video as well, but anyway. Pavel Sokov. You can also short Twitter calls at strike price above 55, and they should expire worthless when the sale happens. That's what I did anyway. Well, Pavel, obviously your call is a little risky, but it's a much better call without a doubt. Poor Francisco. He's naive. He doesn't know what's going on. Tom, you're one of the top financial guys on YouTube. And so someone's warning here a month later. Something's wrong with the Twitter deal. No way it should be down to 48 this morning unless there's a problem. Tom doesn't respond. So there you have it, folks. Tom Nash is a fraud. I'm telling you right now. He deleted the rest of this video. Notice the ending. Does this seem right to you?
Arbitrage. I mean, it's a very tiny arbitrage. But as we say in Russia, it's not about the size, it's about how you use it.
Yeah, He doesn't say, goodbye, talk to you later, good luck. Folks, I'm telling you for a fact, and I know that there's many people out there who watch the video who know I'm correct. Email me if you've got the video. Email me if you know that I'm correct. I know for a fact that I'm correct, and I'll bet any amount of money on that to Tom. Any amount of money. And we can prove it, by the way, Tom. YouTube saves everything, including the changes that you made in your description here, and including the comments that you deleted. It's all being saved. You understand that? They save it for several years for legal purposes, for subpoena purposes. Tom Nash is a fraud. He's a liar. He's a disaster. He's a complete scumbag. Folks, if you're listening to this guy, you need to take down what he's saying, copy all of his videos, screenshot everything, all his descriptions, screenshot all the comments he makes. This guy is lying. He's deceiving people. And I can guarantee you this is not the only time this has happened where he has deleted the video. I think he's going to be using this strategy in the future. And in fact, I believe what he's going to be doing is actually creating videos whereby he thinks in advance, he plans to talk about something, and then the other half of the video, he gives you more specific recommendations so he can later on delete it. That's what kind of a deceptive, sleazy scumbag Tom Nash is. Tel Aviv Tom.